As citizens, we all contribute to the government's revenue through taxes. But where does our tax money really go? Understanding the federal budget process and how our tax dollars are allocated is crucial to making informed decisions about government spending and taxation. The government uses fiscal policy to influence the economy, promote sustainable growth, and reduce poverty. Revenues come largely from taxes, but stem from other sources as well. Countries collecting less than 15% of GDP in taxes must increase their revenue collection to meet the basic needs of citizens and businesses. So in this video, we are going to discuss, where does our tax money really go? Now before we get into this video, make sure to hit that subscribe button and leave a comment below saying I subscribed. I will try my best to reply to as many comments as possible. A huge chunk of your income is dedicated to taxes. Our tax money goes towards funding various public services, programs, and goods that support the American public, as well as paying interest incurred from borrowing. The majority of federal income tax dollars go towards Social Security, health programs, defense, and interest on the national debt. It is important to note that trust funds, such as Social Security, are raised separately from income taxes for specific purposes. As a taxpayer, you hand over the dough to keep some important federal programs afloat. If you've ever been curious about where your tax dollars go, check out these 7 ways the government spends your tax money. Health programs. Your taxes go to fund health programs like Medicaid, Medicare, Children's Health Insurance Program, and general health initiatives. Together, these programs account for around 28% of last year's federal budget. Health programs can be funded by tax money at both the federal and state levels. The federal government collects taxes to finance various public services, including health programs. The Affordable Care Act, ACA, is an example of a federal health program that is funded through taxes. The ACA requires the Department of Health and Human Services to establish the Consumer-Operated and Oriented Plan program. At the state level, the Mental Health Services Act, MHSA, in California, is funded by a 1% income tax on personal income in excess of $1 million per year. This tax revenue is used to fund mental health programs and services in the state. Additionally, some states allow taxpayers to deduct medical and healthcare expenses from their state income taxes. Increasing domestic tax revenues is integral to achieving universal health coverage, particularly in countries with low tax bases. Pro-poor tax policies can help to ensure that the burden of financing health programs is shared equitably across the population. By using tax money to fund health programs, governments can help to ensure that all citizens have access to quality health care, regardless of their ability to pay. Military. Your taxes also help pay for national defense and security-related programs. Funds in this category support the Department of Defense and the cost of international military programs. Military programs are funded by tax dollars, and members of the military have special tax situations and benefits. The federal government collects taxes to finance various public services, including military programs. Only a small percentage of the federal budget goes to military programs, with 1% of the budget allocated to such programs. The Service Members Civil Relief Act provides tax relief to military personnel and persons ordered to report for induction. Military personnel on active duty are also eligible to defer the payment of their property taxes under the provisions of the Federal Service Members Civil Relief Act. When filing their tax returns, military personnel can notify the Department of Revenue that they are taking the extension by writing "Combat Zone" on the income tax envelope and the top of the return. Social Security. More than 60 million Americans received Social Security benefits in 2016. Beneficiaries include retired workers, surviving children and spouses of deceased workers, and disabled workers. Social Security is a program that provides financial assistance to eligible individuals, including retirees, disabled individuals, and survivors of deceased workers. The program is financed through a dedicated payroll tax, with employers and employees each paying 6.2% of wages up to the taxable maximum of $160,200 in 2023, while the self-employed pay 12.4%. In 2021, 90.1% of total old age and survivors insurance and disability insurance income came from payroll taxes, with the remainder provided by interest earnings and revenue from taxation of OASDI benefits. Some Social Security beneficiaries may have to pay federal income taxes on their benefits, depending on their other sources of income. If a beneficiary has other substantial income in addition to their benefits, such as wages, self-employment, interest, dividends, and other taxable income, they may have to pay taxes on up to 85% of their Social Security benefits. The taxation of benefits was a proposal that came from the Greenspan Commission appointed by President Reagan and chaired by Alan Greenspan. The taxation of benefits was increased from 50% to 85% for higher income beneficiaries in 1993. Interest on the national debt. It's no secret that the government isn't gazelle intense about paying off its debt. The national debt is $17 trillion, and the federal government relies on your taxes to make the interest payments on the borrowed funds. Last year, the interest payments claimed around 6% of the federal budget. The national debt is the accumulation of borrowing by the federal government, along with the associated interest owed to investors who purchased these securities. The interest costs on the national debt are on track to reach a record high of $475 billion in 2022, which is the highest nominal dollar amount in recorded history. The interest on the national debt is calculated by multiplying the face value of outstanding treasuries by their interest rates. The interest on the national debt is a significant expense for the federal government, with net interest payments estimated to total $395.5 billion in 2023, which is 6.8% of all federal outlays. The average interest rate on 10-year Treasury notes is currently around 3.0%, which is roughly 40 basis points, 0.4 percentage points, higher than the average rate over the past decade. Veteran benefits. There are around 22 million veterans in the U.S., and your income taxes help cover their pensions, medical care, education programs, and disability payments. The government also funds the operation of VA medical facilities and clinics. Veterans are eligible for a variety of tax benefits in Texas. Disabled veterans may be eligible for property tax exemptions and other benefits. Military retirement pay may also be taxed differently in Texas. Veterans may be eligible for federal tax refunds based on an increase in their percentage of disability from the Department of Veterans Affairs. In Texas, disabled veterans with a 100% permanent and total service-connected disability rating are eligible for a full property tax exemption. Surviving spouses of veterans who died in the line of duty may also be eligible for property tax exemptions. Veterans who are Texas residents and receive military retirement pay may be eligible for a tax exemption of up to $10,000. It is important for veterans to be aware of the tax benefits available to them in Texas. The Texas Veterans Commission provides information and assistance to veterans regarding their benefits and services. Veterans can also contact the Texas Veterans Land Board for information on property tax exemptions and other benefits. Food and agricultural benefits. This category includes assistance programs like the Supplemental Nutrition Assistance Program, the National School Lunch Program, and federal crop insurance. Taxes and USDA programs play a significant role in the agricultural industry. Farmers can receive funds from the USDA through activities such as conservation program payments or disaster programs, which are considered farm income and are subject to tax. The United States government also provides tax advantages for agriculture under federal income tax, such as income averaging and the deductibility of certain expenses. These tax policies help farmers to reduce their tax burden and increase their profits. Federal tax policies targeted to agriculture exert upward pressure on farmland values, which can benefit farmers. For example, the estate tax policy allows farmers to pass on their farmland to their heirs without paying estate taxes, which can help to keep the land in the family and maintain the agricultural industry. Education programs. A tax-advantaged educational program can be a great way to save money while investing in your future. The IRS offers several tax benefits for higher education, including the American Opportunity Tax Credit and the Lifetime Learning Credit. These credits can help offset the cost of tuition, fees, and other educational expenses, reducing your tax liability and freeing up more money for your education. Financial literacy is also an important aspect of education, as it can help you make informed decisions about your money and avoid costly mistakes. The earlier you start learning about personal finance, the better off you will be in the long run. There are many resources available to help you improve your financial literacy, including government-sponsored programs like the Financial Literacy and Education Commission. By investing in your education and financial literacy, you can set yourself up for a brighter future and achieve your goals. Let us know your opinion in the comments section below. This was all for today. Hope you liked the video. Subscribe to our channel and stay tuned for more interesting videos. Stay safe, and we will be back soon with another video.